Hey, what up, everybody? It's Rhett Weaver from Intraland, Utah. I want to break down some factual data as to why interest rates are going to get lower. I know a lot of you have had questions on it. What's going on? Why do we believe that? What's happening kind of in the marketplace right now? So I want to break a few things down. What we've got to really understand is inflation peaked, and we knew it peaked in the month of November. And since then, it's been coming down, and rates have gone from, above 7%, just right above 6% right now. So things are moving quick. It's been, basically 2 months since that happened, a month and a half. And so we should continue to see rates fall like this over the next little bit. And I kind of want to break that down for you. This comes back to basically the Conference Board Leading Economic Index. What this is showing is the last basically 60 years of what's been going on every time we've had a recession. And these are indicators or lines that kind of show us that. So anytime we see one of these big, huge rollovers like we did basically in 2008, 9, really 5, 6 that led into 8 and 9, we see it peak, and then obviously we see it roll over that keeps us into a recession. We've seen this a few times over the last little while, and we're seeing that big rollover right now. So this is one of the big indicators that they're talking about that we're headed towards a recession, and one thing that they're going to watch pretty closely. Another thing that we can kind of take a look at here is, just another way that they kind of break down the data on these recessions. They give us kind of a warning signal, and then they give us a recession signal. And as you can see right out here to the far right, we've kind of broken both of those. And so we're down below it right now. So this indicates that we're headed towards a recession. And this also indicates this is why interest rates are going to continue to fall. One last piece of data that you guys can take a look at. With this leading economic index, they go over these 10 things. These 10 items are big indicators of what's happening. And they keep track of them to kind of understand what's happening economically. The gray here, if you look at the gray, is over the last 6 months. The blue here is what's happened in December. So over the last 6 months, this is why inflation has been coming down. This is why stuff is kind of headed towards a recession as well. Is really only 2 of them out of the 10 have been positive. Everything else has been on this negative side. And if we look at the blue side of it, as far as December, not one thing was positive whatsoever. All of these were negative, which means everything's hurting, which means we're headed towards kind of a recession. One thing that I do want to break down for you is kind of what the markets are doing. If this is kind of your first time here, what this means is green means everything's getting good or interest rates are going lower. Red means everything's going bad. So since November, if you look right here, November 14th, November 10th, right in that area, the last time, really the first time the inflation has gone our direction, because it's based over a year-over-year inflation report. This is the first time where we really saw the inflation start to get controlled. And ever since then, interest rates have been getting better. And that's why we're seeing a lot of green go through this whole market right here. The big indicator here is we always have these level of support. So we got a bottom and we got a top that we got to kind of break through. We're going to have a report on Friday where we should see the bond market get a little bit better, which means interest rates are going to get a little bit lower. So as this week's kind of play out, we're going to sit here and bounce like we have been bouncing until we probably get that next inflation report next month. But this Friday is going to be a good indicator of what's going to happen next month and why we're going to see rates continue to fall. So if you're a builder looking to build, if you've got clients that are kind of sitting out there, again, this is a key indicator to show you that rates are only going to get lower. Things are only going to get better for us, and to keep just moving forward in the right direction. If you have any questions on any of this, please feel free to reach out. Hopefully this helps you guys understand kind of the data. You guys will go back and kind of watch some of these indicators, and hopefully this helps you guys understand that things are going to get a lot better for us. Appreciate you guys listening.